What should founders expect in the venture capital landscape next year?
I think this is the toughest fundraising market I have personally seen. So just being honest with founders that it's going to be grind when you go out to raise.
In terms of the amount of dry powder out there, there's still a lot. In the PitchBook and VCA data shows 65 billion was raised across 380 VC funds. There's about 300 billion in dry powder out there.
Going into 2024, I see a lot of optimism if the founders are playing in the right sectors. And by that, I mean that AI has brought a tectonic shift in the entire tech world.
I think the name of the game for all the founders is GTM. You need to find, go to market is going to be the most important thing, and getting there as soon as possible. Not spending a lot of time developing the product, but
it's much more important to have investor quality and stop worrying about valuation. What's important is, can the investor help you build the company?
Hi everyone, my name is Vasil Dab, this is Raisable Founders Hub, and welcome to our virtual meetup with investors from Silicon Valley. Today we're gonna discuss VC trends for 2025. So if you are going to raise 2025, you should definitely stay till the end because I prepared great questions. I collected them from founders. We actually have around 100 registrations for this event, and I see already almost 50 people join the event. So let's start from the introduction.
And so this is our first ever virtual event, VC Trends for 2025. Everyone can see the Chuck is here. I see directly from Stanford. Chuck is associate professor at Stanford, teaching entrepreneurship to students, I would say, around the world, not only at Stanford. And he's also co-director of Stanford Technology Venture Program. And also Chuck is LP in venture funds and angel investor himself. We should also have Mike Lyons. Maybe he will join a little bit later, but he is an adjunct professor at Stanford as well. So we have Eugene Malobrodsky, and Eugene is managing partner at One Way Ventures. It's a seed stage fund. His business partner was a director of Techstars, yes, at Boston chapter as well. And they have a great fund. They invested in a lot of amazing founders and startups. And actually, Eugene is also well known because he brought his company Anchor Free from zero to unicorn status. We have less unicorn founders in the world than Olympic champions. So Eugene, you're cooler than Olympic champion. Happy to have you here. And we have Dr. Ekta, the founder and CEO of YouFirst Capital. They invest in enterprise software companies. Dr. Ekta is successful venture capitalist, board member, corporate executive, speaker, and writer here in Silicon Valley. So my first question will be about the expectations. What should founders expect in the venture capital landscape next year? And are there particular industries, maybe in NI directions, funding stages, or other trends you guys see? What hot sectors are you personally keeping an eye? And I would ask Chuck to start as he has to leave a little bit sooner. Chuck, what do you tell us about this?
Thanks, Vasil. So at least what I see, there's still limited exits and limited distributions going back to LPs and going back to the investors into the VC ecosystem. And so those limited disbursements are still putting a bit of a damper on things because people are hesitant to invest more if they're not getting good returns out of VC, and especially at the early stage. So I think there's going to continue to be, some level of risk aversion, putting more money into later stage companies. Hopefully, the early stages of the market will start to thaw a bit. I think in terms of the amount of dry powder out there, there's still a lot. The PitchBook and VCA data shows 65 billion was raised across 380 VC funds. There's about 300 billion in dry powder out there. So, if things start to improve, there starts to be more of an exit market again, then things could really warm up. In terms of hot sectors, of course, AI, potentially too hot, but huge amount of global VC interest, sustainability and clean tech, healthcare and fintech. Those are the areas that I think are most exciting. Um, so that's my quick take. Anything else you want me to touch on? I'm eager to hear what others think as well.
Maybe you can also tell us a little bit more about the courses at Stanford right now. Do you have any particular directions, or if you help founders to navigate where to build your next unicorn?
Yeah, so I'm teaching my undergrad E145 class. Ekta has been a mentor, a guest speaker, and a judge in that class for several years now. And so the students are working in teams on startup projects. We've got 12 teams, and it runs the gamut. They're working on agricultural biotech, they're working on AI compliance software, they're working on sustainability related startups. So I largely let them choose, guided by the mentors that we bring into the class. In spring quarter, I'm looking forward to teaching my international entrepreneurship class called Entrepreneurship Without Borders. So Vassal has also been a great guest speaker in both of these classes as well, and so I really appreciate that support. So yeah, so I'm excited to see, that class they target international markets and emerging economies, what's different about entrepreneurship in those regions. And so of course the Silicon Valley model of high tech, high growth entrepreneurship is spreading globally, and a lot more ecosystems are popping up various other locations. The other thing that I think is going to be interesting to watch with the new administration is going to be the crypto space. So, we've been through the sort of crypto winter, and so, starting to see increased activity there in the blockchain and crypto areas that I think will be really interesting to follow that next cycle.
Yeah. I had just sold my crypto before the election, so now it's a good time to grow, for sure, as has always happened with crypto. Thank you, Chuck. Thank you for your input. I'd like also to introduce Nitin Pachisia. Nitin joined us, and Nitin is founding partner at Unshackled Ventures, an early stage fund. They support immigrant founders pretty much. I really like the mission and how do they invest into founders. The interview with Nitin will be published very soon. Nitin, hi. Maybe you can also tell your opinion on what to expect next year.
Yeah, thanks. Great to be here, Russell. Good to see you again. Eugene, Ekta, hi again. Good to meet you both. And Chuck, good to meet you. Look, I think in my opinion, in about 20 years of being involved with startups and VC, I think this is the toughest fundraising market I have personally seen. So just being honest with founders that it's going to be grind when you go out to raise. That said, great companies are still raising, and what I'm seeing is concentration of dollars in select rounds. So the like one of our brain health companies is closing a 10 million A. They went out to raise 8. A company went out to raise 3 and raised a 4 million seed. So I think when investors get excited, they're putting more money into things that they get excited about. But a lot of stuff that was getting funded between, say, 2017 and 2022 that you could argue, was it really fundable, is not going to get funded today. And so I think there's true selectivity about what is venture fundable. And VCs are being, maybe the pendulum has shifted or swung a little bit too strict. It will revert to the mean of what should be normal selectivity in VC. Obviously, there's excitement about AI. I think smart VCs are very clear that AI is not not a theme of its own. It's an extension of software and data that we've been building on for 20 years. And so they're looking at it as purely what does it enable, and not a theme of its own as such. So I think it's just really comes down to what you're building. Does it solve a great problem? Is it going to create a new market or shift an existing market? And can you hit escape velocity? Like those fundamentals are still the same, just applied with a lot more selectivity.
Thank you. Thank you, Nitin. Eugene, maybe you can add your opinion.
Sure. So the current landscape is like there was a huge pause, and I would say pause. There were deals made, but very, very slowly for the past 2 quarters. And there is a lot of dry powder out there. Like the funds raised, especially the big funds, raised a lot of capital, and they have to deploy that capital. I think there was a lot of uncertainty. It doesn't matter who would win, but it was just uncertainty who the next president will be, which puts pressure as well on just uncertainty is never good in general. But I see that has changed quite a bit. Since the election, we have 3 of our portfolio companies got term sheets. One was a preempt term sheet. And so things started to wake up. I mean, it's still, I would say, slow. The investors are trying to put some quirky terms inside of their term sheets that you have to fight back on, but it's starting to wake up. And we feel, and speaking to some other investors, that 2025 is going to be a lot better year for deployment of capital, raising capital, and also fundraising for the funds as well, because there are going to be a lot more exits. With Trump being elected, it's going to be very pro-business, not probably people, but pro-business for sure, which is going to drive results for a lot of the companies looking for exits. I think the industries that are going to be basically big movers would be probably the healthcare industry, because as I don't know how many of you went to the doctors. I have 2 of my doctors that used to do general care have retired. The new doctors are not coming into the general care because they don't make that much money being in general care. They want to be specialists. Which pushes to more patient per doctor, which pushes to less time spent per patient, which requires the only way to provide good services to provide more like a co-pilot approach and data approach to make the decisions for the doctors. So I think that's one. Manufacturing, if Trump is going to do what he said he's going to do, manufacturing is going to be brought more back to the US, but in order to be competitive, it needs to be automated and it needs to be more efficient. So there's going to be technologies, whether it's AI or computer vision, because when we're talking about AI right now, everybody automatically thinks ChatGPT, which is not exactly all of the AI. I mean, there's a lot of different functions in AI, including just regular machine learning and computer vision and other things. And on the AI front, it's going to be more verticalized, more data driven, and really solving actual problems. Like I'm still looking for like the best AI assistant that could actually automate some of my processes. I haven't found one for myself. For example, I think there's a lot of room there. So I think that this is going to be kind of the next year is going to be a very interesting year for everyone.
Thank you. I like your optimistic point of view on the future year. Finally, someone told us like, hey, we expect funds will be more easier to raise, and so maybe founders will be easy.
I mean, it's still going to be not as easy as we're talking about like 2021, 2022. Okay, let's be honest. I think those days are gone. But I think the name of the game for all the founders is GTM. You need to
Yeah.
find like go to market is going to be the most important thing, and getting there as soon as possible. Not spending a lot of time developing the product, but like specifically go to market, because with the new technologies, the disruptions are going to be happening a lot faster.
Yeah. Thank you, Eugene. Ekta, would you add anything from your perspective?
Sure. So I do agree that we are in a recovery phase from a venture winter, which was pretty terrible in 2023. But going into 2024, I see a lot of optimism if the founders are playing in the right sectors. And by that, I mean that AI has brought a tectonic shift in the entire tech world, particularly the enterprise tech world. And in this tectonic shift, whether you are a country, a continent, or a city, you all would feel the disruption of the tectonic plates. So whether you're a Microsoft or a Google or an Amazon, you're having to explain your AI strategy. You're having to explain how you're embedding it. You're having to explain why you are partnering with a particular AI giant and not the other. How are you playing in this field? How are you securing your borders in this field? So given this tectonic shift, when even the large players, who were having a monopolistic hold on some technologies are having to explain and basically develop their AI strategy in a very dynamic mode, which is evolving as well. Given this macro environment, how would startups position themselves as good opportunities for these traditional buyers who are themselves in a displacement mode? That's the big question. And so from that angle, founders who have understood this huge tsunami that just came in, brought a lot of positive changes as well. So I wouldn't call it like I don't want to bring a negative connotation to it, but those companies who are realizing this massive opportunity are aligning themselves as AI agents, for example. And there is $1 billion in funding that has gone already this year into AI agents. So those startups who are feeling they're not getting funded, they should re-examine whether they're playing in the right field or not. And it's not just that they are feeling the pressure of having to reinvent themselves, pivot themselves, change their story, become an AI-aligned company, but they are in that macro environment where everybody is having to do that. So it's smart to re-examine, realign, pivot yourself in a way that you still remain relevant in this environment of the huge shift that happened. But they're very interesting and new avenues coming out of this tectonic shift. Once the founders realize they're in a new world, it's fresh off the cuff that there are AI agents now that are going to make automatic payments for a consumer, which I think is huge because, the previous wave of AI was bringing some level of automation with a huge involvement of the human. The second level was that it's learning from the human on how to do small workflows. The third level is there is that level of autonomy is going to be achieved or is desired, where under the blessing of a large LLM or some sort of a version of a model that is validated and is very well known, they are floating out agents which are very personalized and very effective for a particular human, a particular organization to carry mundane tasks and repeated tasks in a very efficient way. So long story short, as long as you understand and realize the tectonic shift that just happened, and you're willing to re-examine, reinvent yourself, get the right kind of talent on board as well, then you are positioning yourself for a lot of dry powder that is already available, but needs to be diverted. And the decision makers to divert that dry powder to you need to be convinced that you have understood the major changes and you're very well positioned for success in future.
Thank you very much. Guys, I have a little bit tricky question. So recently I watched one YouTube video with it was Innovation Ventures managing partner. It's a $3 billion fund from China. And so he transitioned into a founder himself. So he started to build a competitor to OpenAI. And he said that investing in such a time is like sitting in the back seat in the car, and he wanted to drive that car. He was waited for this moment of disruption like AI is happening now. So if you were starting an AI company, what would it be and why?
Is that question for me?
Yeah, if you can answer, yeah, please. It's for
Sure.
all. Yeah.
So this to me is like the chip world several decades ago, right? And there is only so much space for major foundational models to play in the field. The reason being they're very capital intensive to run today. Now, the good part is that when I think in a year, 2 months before, OpenAI was associating something like $36 to process a token of information using their models, and now it is a few cents. It's some number of cents. That's how the sort of the computation costs are coming down. There are new inferencing hardware opportunities coming up that will allow the speed of inferencing to go up and the cost of inferencing to go down. So those are some of the good shifts that are happening right now to enable possibly more players, and if I may say, to democratize the creation and use of foundational models in the future. But that's a distant opportunity. If you're positioning yourself for success now and you want to show an opportunity to a VC to be successful in the world, you're better off aligning yourself to the existing foundational models, which are both open source and closed. So you can pick your garden from that sense. You want to go to a walled garden, or you want to, use a more open garden available. Your choice, but both are available. And these foundational model companies are now looking for opportunities to invest themselves in companies that are aligned to the success of using their foundational models for some specific applications and to get into specific sectors. So, for example, OpenAI, today, if there is somebody who is saying, I have found the best use of your model for drug discovery, and here's my team. I've worked all my life in this field. I feel like we can take ChatGPT to the next level in terms of, reducing the time and efficiency to get to a drug molecule. I think ChatGPT would take it as long as there is some level of loyalty in using the platform for a certain duration of time. And that's, I was talking to a friend who runs the OpenAI startup program this week, and I found similar signals coming from him. I've read information about Anthropic starting its own startup fund. Perplexity, which is a company in the AI search space, has now already, is already brewing their own startup fund. So these have now become fundamental model providing giants who are now trying to enter into new tributaries, and it's a good time for a startup to align themselves as a tributary to these mega giants.
What about yourself? Would you
Kind of, you
yeah.
kind of did not answer the question of which company you would start.
Yeah.
I would do an AI agent company. I thought I'd touch
Okay,
upon it.
thank you. Yes, Chuck, please. You raise your hand.
Yeah, so I think an interesting, still unsolved area is going to be the agent to agent interactions, and as we get more and more of these AI agents, and because they tend to rely on the same small set of foundational models, these AI agents are going to increasingly be interacting with each other, and then also with humans in really unpredictable ways. So I think some kind of back-end infrastructure that helps AI companies to manage and to be able to get some predictability into the sort of epiphenomena that can happen when you get agent-to-agent payments or agents kind of optimizing and training themselves in interactions with other agents and a combination of humans. I think that's still an unsolved, really open area. I'm on Stanford's part of Stanford's AI Safety Center, and so these kind of multi-agent interactions I think are really interesting. One just very simple example of this, people have probably seen the 4 a.m. circle of honking in the Waymo parking lot, where all the Waymo vehicles are trying to park and start honking at each other and waking up everyone in the neighborhood in San Francisco at 4 a.m. So I think, that's just one example of many of these kind of weird interactions and anomalies that can happen when you get these kind of multi-agent human interactions. And we need some better, more systematic way to be able to model, predict, prevent these kind of we may see them as edge cases right now, but as we get more and more of these kinds of interactions, I think these kinds of examples are going to pop up more frequently.
Thank you, Chuck.
If I may add a little bit
yeah.
here, and Chuck explained it so well on the opportunity regarding AI agents and the interaction, agent to agent interaction that he's foreseeing. This will have to ride on an infrastructure that provides a digital identity. There needs to be a mechanism to discern between a bot and a human, and increasingly so as agents start to interplay with each other. So we're investors in a company called WorldCoin, which is Sam Altman's other company in the identity space, where they're using a biometric identification method to convert a human's biometric identification into an unhackable digital identity that can be used as a way to make sure that it's actually a human behind a particular automation or workflow that's happening. So the reason I'm saying is to enable AI agents safely and riding on Chuck's contribution to the AI Safety Center, there needs to be a mechanism to make sure that the identity posed in the cyber world is basically sponsored by a real human and not AI going haywire.
Thank you. Eugene, would you like to say us what would you build?
I think that with multi-agent AI and all these technologies, it would be a lot easier to do cyber attacks. So, which nobody here talked about, but I think I would basically be doing something in the security space to protect the infrastructure as well as identities from the cybersecurity point of view. Because this is going to be the big issue, is that depending on who controls the agents, these agents can do a lot more damage than they used to. You don't need an army of hackers anymore. You just need a few smart ones.
Mm. Very interesting. Unfortunately, my clients still hasn't joined because he also like to speak on the cybersecurity security issues. But okay, Nitin, maybe you can add something. What would you do if you would start an AI company nowadays?
I think I would look for something that is much more of an immediate pain point. I think the um, looking at enterprises for where a lot of work is being done manually. For example, mechanical work, whether it's painting in the defense space. Like these are tiny things that have huge budgets. So for example, an aircraft goes out on a run, comes back, there are dings, it has to go through a full inspection and repainting before it can go on a next mission. Um, you would be surprised at how many of those use cases are billion-dollar spends for enterprises. And so I would look for one of those very immediate things on which enterprises are spending billions of dollars, and build an agent slash AI solution to fix those. That, like, to me, the immediacy of pain point for what AI can do with very little human intervention is where I would start a company today. A little bit down the road, when there are many of these companies operating, then I would think of infra solutions, because then there's enough of these companies to buy that infra.
Mm-hmm. Thank you, guys. So let's shift to another question. So during the last events, like the Tech Week by Anderson Horowitz, TechStars, I had a lot of conversations with VCs, and more often I can hear that they use more and more AI solutions themselves. So I heard that Crunchbase founder launched his own Signal AI or something like that. So it looks like AI tools and platforms are more utilized by VCs as well, and that AI also predicts which startup is will provide an allocations, will be more likely successful, etc., etc. Would you tell us what AI tools do you use currently, and what do you think will happen here? Who would like to start?
I mean, I could start.
Sorry, go ahead,
So we
Eugene.
haven't, I mean, we are using ChatGPT and like little things, but we're not using, and I don't think we will have a tool for early stage startups that would actually make a decision for you. I mean, Google Ventures have been playing with that for many years before even all the technologies today, and they kind of went back to actually humans meeting with companies, not just making decision based on what the computer told them. Because there's a lot of human factor that AI still cannot really make a decision on. The AI tools can help us, for example, understand how big the market is. It can help us understand the technology maybe a little better by just giving us information. But I haven't seen a tool that will make a good decision for you. That's it, in my opinion. I think the early stage, the human factor makes a big difference. For late stage, it's a lot easier because you have financials, you have a lot of data, all that stuff. Like the machines today can crunch all that data and kind of do some predictions and assessment of the market, compare it to what the TAM is, as well as what your revenues are, the potential growth. All of that can be done when you have a lot of financial data, and you already have solved the GTM.
Thank you.
Yeah, I think we're using AI is within our existing workflows. I use Notion AI. I type in bullets and it turns it into a memo. I use Superhuman AI for writing my emails, and it's pretty impressive how good they've become. Zoom has a bunch of AI apps now that help transcribe, and so we're not spending time taking notes from meetings. Um, I'm waiting for HubSpot to launch its AI product so that we can get some help on CRM. But it's all like what you're hearing is these are all things that are in our workflow where I and our team were spending time, and now we're not because it's become easier for software to do it.
I'd like to add that, just like how Nitin said and Eugene shared as well, we are using AI as an assistant and for market intelligence, but they're not there for that level of decision making. Even between two partners, there's a conflict in terms of how you're assessing a particular company. So we are not there with AI yet to make those sort of decisions that would be unanimously accepted, because there's a lot of reading that happens in the room when you're meeting with founders and trying to understand their capability to build a successful company.
You'll have multiple agents fighting with one another, AI agents,
Yeah.
trying to prove each other wrong.
Yeah, but one story that I heard, so they get data from Crunchbase. So and of course the founder of Crunchbase has a lot of data about all the allocations that are available in the market, and the teams behind. But another fund, they take the data through API from Crunchbase, from PitchBook, and also they buy data from payment providers, and they can actually track which companies started to receive a lot of payments. And so you can also, AI can do the due diligence of the person, if this is the first time, second time, third time founder, if there's a Stanford relationship or something like that, if there's a PhD, someone's in the team, etc., etc. So it looks like some big funds, they invest a lot into building their own AI models that will help them to predict which company will be raising and will more likely succeed. Okay. Thank you very much for your inputs. Just a few closing remarks before we dive into live Q&A. Guys, prepare your questions, raise your hands, and soon we will take a few questions from the audience. Before we do that, can you briefly tell us what is the best way to be on your radar next year for the founders? Because it looks we have almost 50 attendees here today.
I'm pretty good with LinkedIn. So if if you have done some work and homework in understanding the sectors we invest in and how we, align our thesis to our portfolio, I'm going to respond. It may be slow, but I will.
Okay.
Yeah, we're always open. So we have open access form on our website, and anyone who's ready to pitch, fill that form. You will get a response. We don't not respond to people or ghost people. Second, if you're not raising right now, join the Immigrate community. That's the best way to stay close with other founders as well as our team and get answers to some of the most common questions that come up when you're in that pre-founding stage. So a lot of education, inspiration, and connections through that community. Both the community and the pitch form are on our website at unshackledvc.com.
Thank you, Nitin.
I'm fairly good at responding to LinkedIn messages. Maybe sometimes take longer because it's getting a little bit out of hand, but I tend to respond. But most of the connections are done through somebody that knows me. That's usually the fastest. The second fastest would be LinkedIn. Email would probably not be the fastest because there's just thousands of emails coming in.
What about accelerators, demo days? Are you there, guys?
Absolutely, I do that a lot.
I'm rarely, maybe like 3, 4 a year.
Okay. Which
Yeah,
ones?
that's pre-accelerator. So we're seeking founders at the inception point.
Mm-hmm. Yeah, Nitin, I like your approach. It's very unique, I would say. I recently wrote your bio and the bio of your partner about how do you choose founders, and you actually invest into solo founders. You're looking for solo founders. You help them to move to the US and with the legal questions. And I really like what you do, guys. That's really powerful and helpful for many founders that are here today, can be. Okay. Okay. Guys, looks we have a question from Alex.
Oh yeah,
Al-
looks like I'm only here who raised the hand. Okay, thank you very much. It was really insightful. So I have a very really personal question. We are on early stage, so we're building the AI assistant based on the multi-agent framework. And we are on early stage, and we are negotiating with the investors. Here, I would like maybe hear your personal experience on how you build that valuation, how you evaluate the startups at this stage in numbers. That would be the best way, like example, if you provide some numbers here.
I mean, I can start with some things that we look at. Well, besides the founder and their experience, and I mean, we look at the team, how strong the team is. We look at the employees that they hired, how strong are the employees. But regarding the numbers, I mean, it depends. Do you have the product built? How big is a market of the product that you're going after? And are there any revenues at all, or it's like zero for now? Like all these make up kind of the decision. So if you're already in the US, the valuations are higher than if you're still in the process of immigrating, for example. But we've seen pre-seeds to some extent going from 6 to 12, and then the seeds 12 to 20. Those are kind of majority. Like obviously there are on both sides there are outliers, but like kind of majority fall into that category.
So what I'd like to add, based on, your particular sector, there is a wide pool of AI agent companies that have already started right now. They're all, useful, and they're going to be in demand, as long as they are able to have a very solid story on how they're going to align themselves to the walled gardens I previously mentioned, and how they're going to go to the market in the particular sector that they are good at. So your story needs to be very convincing on, if you're going for a particular sector, why is your team the best suited to be the AI agent for that particular sector? And if you're haven't chosen a sector as yet, I'd strongly recommend that you choose one, because that creates a differentiation and has an effect on how your company is valued as well.
I think the valuation is maybe a step 5. I think the first things to figure out is, are investors interested in your company? If investors are interested in your company, how many and how much heat is on the ground? The more competition you create among investors, the higher the valuation. At pre-seed and seed, valuations are not mathematical formula. They're a combination of fear and greed. Greed on the part of investors that this is the next big hot thing, so I need to be in it. and fear that if I don't act right now and offer a good valuation, a good price, I will lose this opportunity. The combination of that greed and fear is what will drive valuations. And so I don't think like also for most founders, especially first-time founders who haven't built with venture scale before, I strongly recommend not spending your time thinking about valuations. Build a company, build a product, go run a great fundraising process, and valuation will be the outcome of running a great process.
Yeah, thank you guys.
Thank you very much.
I always say, and my personal opinion also, that in order to increase the valuation, every founder should work on the strategy, on the vision, on the network, and on experience. So experience is actually attraction, and so all of these factors they help you to get to that point of your strategy faster, yeah, with the right network and the right experience gathering the team. So okay, thank you very much for the question, for your answers. Anyone else want to ask a question? Okay, we have Stas. Please, Stas.
Hello, guys. Thank you for your great speech. I actually want to continue this question, but mostly on the formula or the idea how to integrate the equity and the funds actually looking for stage pre-seed. So right now, for example, based on my company, we have a little amount of paid users, like 100 users, but on the short run. And now we understand our marketing needs or operation costs and understand how will be our strategy to expand our startup. But what is this formula to understand the amount of money we're asking and the equity of company we are proposing? Is there any kind of advising on this topic?
Well, I think the easy thing that you can think about is each round has sort of ranges of expected dilution. Pre-seeds go 10 to 15%, seeds go 20 to 25%, Series A's are about 20%, and then it starts tapering down. All of those ranges only operate if you are able to, again, do the first things first, right? Ekta and Eugene shared some of the fundamentals, and then using those fundamentals, if you're able to tell a great story, get people excited, want to partner with you, you then have the optionality of picking who you partner with, and that's how you can drive both the quality of investor that's on your cap table and lower the dilution, right? The lower the dilution, higher the valuation for the same amount of money. But also know that at each stage, responsible, good investors have their own portfolio construction models, which means that they're seeking a certain ownership for leading the rounds that they're leading. And so there's a reverse math that happens, and a lot of times it's less about, like, when I was raising money and I was building companies, I wasn't looking at how much of my company am I willing to give up. What I was looking at is, number one, can I get the first term sheet? Because the first term sheet then has a trickle-down effect of getting subsequent term sheets. Once I start getting multiple term sheets, then I have the options to choose. And in all the rounds that I raised, very often, or I think in all of them, I did not go with the highest valuation term sheet. I went with the highest quality investor, who often was a lower valuation, because quality comes at a price. You're paying with equity. That's, the price you're paying. If you want high quality, you're going to pay a higher price. So there are considerations involved, but I would again try to recenter everybody to think about you're going to dilute 10 to 15% at pre-seed, 20 to 25% at seed, about 20% at Series A. Those are the medians. If your company is doing better, you may be a little bit less. If your company is not the median company, meaning sometimes companies have to raise two seeds, so you're diluting 20% twice, right? Those are just things that you will discover as you start building the company. You can't predict all of those events upfront.
Oh, you're
Okay.
correct. You cannot.
Hi, Mike. Hi, Mike. Yeah. Maybe you'd like to add. So, Mike, I introduced you actually. New Line Ventures and Angel Professor from Stanford. Mike, thank you for joining us. The question is about valuations. What can you say from your perspective? How to evaluate a company at early stage?
No, I think I completely agree with what Nitin said already. It's about the quality of investment. If I built a dozen companies doing that, and been on the venture side across 5 different funds, and so I kind of played both sides of it. And he's absolutely right on. I mean, it's much more important to have investor quality and stop worrying about valuation. The valuation is going to be an artifact, kind of the VC strategy and what they need and the ownership percentage they need to make their fund work. Okay, so that's really being driven by their business model. And entrepreneurs shouldn't get so hung up on that, and some of them do, which is a big mistake. What's important is, can the investor help you build the company? That's what's important. Because if you can't build the company and scale it and get to size, then how much the investors own is kind of irrelevant. It's not going to work anyway. And it's all about getting to scale, because if you need VC money to build your company, and many companies don't, but if you need it, it's extremely expensive. So, getting into an argument about how expensive it is just pointless. The question is, if we need it, what we need is good investors. That's what really matters, because we're going to drive this thing hard. And also as an entrepreneur, you're very much playing a pocket billiards game. It's not about sinking the next ball. It's about getting the next three. And so you're thinking on this round, what happens at the next round and the one after that? And this is one of the reasons why you don't want to get the valuation too high at the beginning and get out of whack, because then the uplift becomes much, much harder. It's much better to start in a more reasonable place and then keep moving up by hitting the milestones. Anyway, enough said.
Yeah, thank you very much. It's funny because I have 2 slides for today. Another speaking opportunity about the poker and VC, and actually the same idea is that every stage is different, as well as in the making bets at poker and making bets actually in the venture capital. Okay, guys, if you have one more really quick question, we can take. If not, then we can move up to end. And first of all, I see that 50 attendees are here with us during the whole session. I'm super excited about that. I promised you a small bonus, maybe large bonus. It depends on the final result. But for every of you who attended, and for every of you who will write a post reflection on what you heard today, who will tag me on LinkedIn, maybe some of our speakers, and our channel, Raisable Founders Hub, because this is the channel where we promote the content, and we will actually share this video on our channel of the recording of the session. Then I'll offer you the next opportunity. You can send me the deck if you think that you're ready to raise money, and I will share the deck with the investors. Or you can get a one-on-one mentor session with me on how to improve your deck. So this is the small bonus for you. And one more bonus story is, once I did a story like that, I did a post on LinkedIn after Startup Grind global conference, and I mentioned all the managers of the Startup Grind conference, and so they read my post and they were super excited about that. So nowadays, the last 3 years in a row, You can see my picture on the screen. They promote me for 3 years on the main stage on their website. So it actually works. And I really recommend you doing this, not even today, but all the time when you have some engagement. That's how you can build your network. That's how you build some relationships and with other people, with the speaker like we have today. So highly encourage you to do that, and don't forget to subscribe to our channel and not to miss interviews. For example, the next interview will be published with Nitin, and we touched a lot of cool things. And the interview with Eugene, with Mike are already on the channel, and Sanjit works together with Ekta, so his interview with him is also on the channel. Thank you very much for this great conversation. I really appreciate your time, your input, and have a great day for all.
Thank
Thank
you,
you.
everybody. I really enjoyed the session. Take care. Bye.